Good evening, ladies and gentlemen. Today is the 17th of September, and we had again a massive gap up. We had a 100-point gap up. Freaked the hell out of people who were taking straddles at. And anyone who's been straddling for a while now has been getting screwed quite often. So, anyway, we had this massive gap up, made a 100-point up move. Just did not make any sense. I built up super bullish to cover for the fact that there were call shots in the system. That changed very quickly because then we started having a slide and the same put writing that took place had to cover very quickly. I was short the 17700 put option at about 70 or so, and I think its day's heights at around 180. And what ended up happening is I tried to manage my risk by moving down my calls. That did not work out because calls were not giving up value and puts were gaining exponentially because the rate at which the puts were written in the morning, the same rate they were being unbound. So kind of a whipsaw on both sides, and then to cherry on top, at the exit, I got a good 4 points of slippage. I wanted to exit at 1%. My initial risk tolerance was 0.5%. I changed that a little bit and said, okay, I can go up to 1% because I increased my sizing and tried to take advantage of the so-called IV spike. That backfired even more fantastically than one could think. And I had to give up a little more than 1% today, but I'm fine. There were potential opportunities to re-enter, but I think this is where having a hard stop is important. It does not matter. You will take a loss. Take a loss today and don't try, even if you see, look, things will start looking like very good opportunities once you take a loss. You're like, look, I can take re-entry and potentially my position will benefit by the end. And what ends up happening is majority of the time that will hold good. The one time that it doesn't, it'll really hurt you. It'll hit your psychology. Your future trades are going to be affected by it. You'll have given up quite a lot of what you've gained over the past month in that one day of trading. So it's best not to trade. And that's exactly what I have decided to do. So I think if anything, the takeaway from this video should be that no matter how attractive re-entry looks, once you've taken a stop loss, that should be the end of it. In this month, I'm already up about a good 5%, and giving up 1% today is not going to be too much of a thing. And it was coming. At some point, it was coming. I didn't have a single stop loss day the entire month. This was coming, and I'm happy that it is well within that 1 to 1.25% range. And thank you so much for watching. I hope you had a good trading day. I hope you didn't get stuck in this IV spike. And I will catch you on Monday. Have a great weekend. Take care. Bye-bye.
Want to meet like-minded traders and discuss option strategies, adjustments and more? Just type in Discuss Nifty in your Telegram search box and join the friendly trader community.
Good morning, ladies and gentlemen. We have opened once again with a tremendous gap up. I entered my position when I thought there was a good IV spike, and turns out that wasn't a good enough IV spike because from there we continued to spike. We opened 100 points gap up. I initially had a 400 point strangle with my puts at 17,500 into the strength, and just to sort of work with how the market has been behaving lately, I moved up my puts. But what has ended up happening is both the puts and calls have gained. And there has been a continued IV spike between 920 and 930, and only now it is cooling off a little bit. So yeah, as you can see, the mark to market is changing quite quickly, and I've kept my position sizing relatively low. And the reason for this is there might be a little bit of violent movement where you might gain and lose by a lot very quickly. And there's a relatively higher risk to reward in this trade because it is a much closer range of 300 points. So that is exactly why I've kept my range the way it is. And my plan here will be, in case we break the day's low, and we convincingly break the day's low at 20 points from there, then I will take risk off on my put option. If we head to close to about 20 points above 17,750, then I will take risk off on my call option, depending on what is happening. So all that said and done, advanced decline looking very strongly in the favor of advances. Biggest movers obviously being banks, with the bad bank announcement and whatnot. And HDFC Bank, after staying quiet for a long time, is today made quite the move. So anyway, all this said and done, for now this is my position, and I will keep you posted on how it goes. Into the IV spike, I was kind of positioned well enough that I wouldn't be too bothered by a continued IV spike also, because on this sizing and in this way of structuring a trade, 10 points would roughly equate to less than 0.5%, right? So 10 points would equate to less than 0.5%. And even if I have to bear 20-point move on the position itself, that would be 1%. That would give me a lot of flexibility to continue to remain in the trade and manage it at different points. We'll keep you posted. Time is 9:41. We've now just come back to the day's low. I will wait for a couple of candles. I will wait for 20-point move beyond or to hold this range, because I don't want to adjust this position too preemptively and then get burnt by 20-30 point moves in either direction. So that's the plan. Okay, so one adjustment that I'm doing to my Larsen position is I'm adding a bullish strangle. So I'm selling an in the money put and not even the out the money call of the same strike, but one strike away. Reason for this is at the end of the day, my position has benefited a lot. My Larsen shares are giving me tremendous profit, 4 lakhs, but my F&O position is losing me currently 36,000. So to ensure that I collect that 36,000, I will be, to ensure that I basically come out of that position profitably so that I don't have to give delivery. One option is to do a roll forward. Second thing is I can just add this trade and then basically come out of this position with a profit. So I'm adding 3 lots. Currently my position is short 2 lots of 1700 call, which covers my entire position in shares. And this particular position will now give me a break even of 1674 and 1775. So 50 points up and down roughly. And it'll add more potential decay in this range. So this is the trade that I'll be taking. Okay, let me go over how this looks now. So after this adjustment, I now have a lower break even, whereas previously I didn't, and my upper break even gets pushed by almost. It was previously at, I think it would have been at 1716, so 55 points. My upper break even is pushed, and more or less now, if Larsen continues to move higher, I have a good amount of space, and if it continues to head lower, I have a good amount of space. I will, what I'll end up doing is whichever side gets tested and is approaching break even point, I will roll forward that side into the next month and take more trade and manage it from there. But basically I will come out of this profit. If required, I will add more capital. I will come out of this trade profitably, and that way I will never have to consider giving delivery of my shares. So we've had a continued up move, and my way of centering around 17,750 has worked out a little bit, because the 17,900 calls are not really gaining much in value, whereas the 17,600 put is giving up a good amount of value. And I was in this position much before we tested 17,750. So puts me now, it was delta positive to begin with, and we'll keep you posted. It's 10 o'clock at this point of time, and whatever initial IV spike was there, that is cooled off. And yeah, we'll let you know how things go from here. I have very good premiums, so even if we do make a continued up move or we head on the downside, I feel like this position should be fairly manageable. And if we continue to stay with high premiums, I can always carry a short Vega trade, shorting the volatility itself in the weekly options. So, okay, for the longest time I tried not to do any adjustment, but it's just too much strength in the index. So once again, these put options 17,600 I had sold for 62. I squared them off now at about 45ish, and in that 72-73 range I've sold the 17,700 put option, because there is tremendous amount of 17,700 put right, and tremendous amount of 17,700 put writing, and some straddles at 17,750, 17,800, but yeah, massive strength. And also from the fact that my call is going to expand more if we break 17,800, was the put I don't necessarily think will gain that much in terms of if there is a reversal. Makes sense for me to now move up. And my delta technically neutralizes at 17,800, so this is a relatively bullish position itself. But with the steady spike in IV on the call side, it is difficult to anticipate exactly how the market will react, especially if there's once again a burst of short covering, because we had a gap up, sold this around 50, but still gained 21 points. Had a put which is much closer to the spot, 100 points, and my call was 200 points away, but that's probably exactly why I've been able to stay in this trade for long enough. And also my sizing is relatively lower, so that gives me a situation where I will be able to fight this for longer. And yeah, as of now, about 3 points down, and that's fine. We gapped up, and then from there we made an 85 point up move. So as of now, this is how things stand. Potentially, if there's an IV crush during the day, this position can gain quite a bit. And at the same time, I can't just sit in it hoping that it'll work out. So in case it starts going against me and all said and done, I'm close to about, I think today's stop loss 0.5% would be a fair enough point to exit. So that is the situation. We'll keep you posted. The time is just about 11 o'clock. And yeah, continues to be immense strength in everything. I think the problem is nobody is selling anymore. So it doesn't take much to move the market up because people have just stopped selling. Okay, so a little bit of a down move now. Fall off in IV is ensuring that the put, which is very close, is not too affected by the expansion. So I will be now taking risk off on my position on both sides. I hope I haven't gotten too much slippage on these trades. Okay, what I've done is I have bought back this spread of 17,700 and 17,900, which is just 200 points wide, and I have moved that to 17,600 and 17,950. The plan will be that continue to keep that mildly positive delta. My put is 150 points away and my call is 200 points away. The idea here is that we most likely will be trending higher, so I want to keep a positive delta, and in case we head down, there should be a crash in IV. Majority of the IV expansion is due to the kind of up move that we made. So in case we head up, the positive delta should help my position, and in case we head lower, then the crash in IV should help my position. This is one of two things that I'm working with, and as of now I am 0.25% down. So if this position then starts losing me another 0.25%, I will take that as a stop loss for the day. For now, I've just taken risk off because the rate at which these puts will expand if we have a pullback will be quite high. I don't want to deal with that. Okay, so Bank Nifty is below 38,000 now, and basically what I'll have to be on the lookout for is how Bank Nifty reacts around the day's low. So if it takes support and bounces from here, then that's fine. But if there is a breakdown, then I will have to bring my calls in closer and short the 17,900 call. It's kind of annoying when you have massive call side expansion for the entire day and then a reversal from there. But more or less, I'm expecting as has been the case for a long time now, that the dip will get bought. And yeah, until the particular pattern stops playing out, you kind of have to assume that that pattern will continue to play out. But you need to keep it within your risk management where, for example, I'm saying 0.5% is the maximum risk I can take today. It has to sit within that risk management framework so that you didn't say that, okay, every time the dip got bought and finally the one time that it doesn't get bought and that time will come. You don't say that, okay, I got screwed because I just followed what the market had been doing. It has to sit inside your risk framework. Okay, quite a sharp down move now, but it is not particularly affecting my position despite it being relatively bullish because it is leading to a fall off in IV. As of now, the way I see it, there's a tremendous amount of put writing at 17,700, which means this should act as a support. We're just about at this point 35 points above 17,700. There should be a good amount of support that comes in here. But in case there starts to be a put unwinding and we start breaking the lows of the day, then it would be time to get out of the put side, because just as quickly as that put side open interest has been built up, it can start to get unwound very quickly in case things start going south. Okay, had to take the exit, got completely played. I mean, it's just one of those days where it just wasn't going to be in my favor with the steady rise in IV. I've taken the exit. I wanted to take an exit around 1%. In exiting, I got quite a bit of slippage, and that ended up giving me almost 4 points in slippage. If you check my orders when they were placed versus what prices they should have traded at, ended up giving quite a lot of slippage to the market. Now, that being the case, now the dip is getting bought and there's potentially an IV cool off, and that can be a trade, but I can't take it anymore because my risk tolerance has been met. It's gone over that, and on a non-expiry day, I'm not willing to then go in again. A bunch of reasons. One, I won't have the best mentality. Two, now again, if we make a lower low, that is going to absolutely devastate the put options. So that's it. My risk is done. I'm done dealing with the day, and I'm out. And there wasn't too much. Like if you were trading today, you would understand that into a down move, call options not losing value. And into like a slight green candle, whatever call options have lost, immediately they gain back completely. Put options are not giving up value. So it's just not the kind of day that can be traded, because it like we gap up 100 points from an all-time high wherein we've been gapping up non-stop for a while, and from there we head higher after gapping 100 points, we make a 100-point up move, and from there we make like a 220-point down move. This is never going to be easy to manage something like that, and ended up getting played basically on both sides. And now the idea is take this back seat. This has been a good month, a good 5%. Now I've lost 1% here, so don't bother about it and go next, basically. So yeah, will not also be carrying any trades, because after booking a loss for the day and not particularly understanding what happens here. So the thing is, we've been heading higher. The reason I've not been taking positional trades is I want consolidation at least for some time in order to figure out what kind of ranges I can work with. At this point, really anything is possible. We are at a level that everyone is uncomfortable with, and people are writing put options like anything. If there's an unwinding and whatnot, it can lead to all kinds of randomness in the market. Yeah, I think this is a lesson I learned from a long time ago, that if I take a stop loss, it's best to stay out after that. If I'm taking a stop loss and then I re-enter, invariably I'm going to perform very suboptimally, and that's going to end up hurting me far more than any potential benefit from taking re-entry. So thank you so much for watching. I hope this was useful. Today was a stop loss day. There really was it. I mean, I think if anything, the takeaway from this is cut your losses. And yes, by the end of the day, maybe my position would have ended better than where it was at my exit. But there's also so much risk that I didn't take. What if today we break 17,500 on the downside? It's a probability. There's a probability for that. I mean, there's a reason somebody is paying 55 rupees for the 17,500 put option. Everything is a probability in the market. So that being the case, thank you for watching. Have a great weekend, and I will catch you on Monday. Take care.
Thank you for watching. Please post any questions you have in the comment section. Also, do not forget to like and share the video and subscribe to the channel. To find us on Twitter, Telegram and Facebook, use the username NiftyBN. Also, we post some of our trades to the community tab, so do not forget to check that from time to time.